It is Monday, April 14th, 2021. It is 8 p.m. Pacific Standard Time, and so you know what time it is. It's time for a little bit of coin metal. And it was yet another non-virtual get your ass kicked at Jiu-Jitsu Wednesday. I felt like I was being a bit of an instructor today. While not actually being in front of the class giving the lesson, I was the highest ranked / most experienced person in my group of 3. And so I was doing a lot of tips here, tips there. I mean, I tried to refrain from it because that kind of takes away from my training and their training, but at the same time, there were a couple little glitches that made the moves not work right. And so I felt the need to intervene in the misunderstanding and resolve that for them. And it was a lot of fun. I felt like the gentleman that I worked with got a little bit just something out of it. They were definitely demonstrating some market improvement from the moment that we started till the end of the class. So I gotta think it was a positive experience for them. Still sweated my balls off, so I feel like I got some workout in, right? But anyway, as far as the movement goes, it was a flow starting from where you're in butterfly and your opponent is facing you with one knee up and one knee down. You know, they're on one knee and they have one knee up. And the approach is to double hand the hand opposite the leg that's up. So, if they got the right leg up, you grab the left arm at the wrist and also at the elbow. And this is to give you something to drag in a little bit, and then you take your foot that you got on the inside of their leg that's up, and you hook on the inside of the knee and kick it over. And you do want to retain that leg. I mean, it's kind of natural that they want to clamp down on it and get a quarter guard on it. But that's a good thing in this particular position. And it was funny. I started doing something on my training partner or partners. Actually, I was working with more than one today. Where they get to where they were on the underside, and they'd be trying to navigate up to to grabbing their leg and having the arm over my shoulder. So it's almost like a rubber guard position, but not quite fully squared up at that point in the movement. And anyway, like they would get me there, and while I was down, I would have my arm wrapped around their neck, and I started going like I was going for a punch choke. And it was funny, I had this one guy, and I had him so tight that just me trying to squeeze the hand in there, he immediately forgot about the technique we were doing and started trying to address the hand. I mean, that's kind of like the best thing to do in that kind of situation, but nonetheless, if he was able to tuck his chin, he probably would have been a little bit better off. And that's one of the things that I was doing that I don't think that they were catching, is when I would do the thing with them, as soon as I would lay on my side, I would put my hands on my head and have my elbows out. Now, that does open you up for the possibility of them sweeping under your neck and getting you into that back take position, but it also makes it to where they can't wrap around your neck. So when they reach around your head, like I was doing, instead of choking you and getting that shoulder on the side of your neck, they can't get past your arms. They just slide off your arms. And so, it's just little tweaks like that I've picked up as habits, and I haven't quite broken them yet. There's, I don't know that I should, honestly, because I think some of them are useful. Like there's one thing I do, and it's habitual. I've never managed to break it, but I don't know that it's a bad thing that I haven't been able to break that as a habit, because the thing that I've been doing is on when I've got side control, and I've got my arm tucked all the way under somebody's neck. So I've got that shoulder kind of pinching down on the neck, and I'm like reached through as far as I possibly can be with my left hand. One of the things I like to do is I've got my weight on top of them. I've got my elbow at their neck, and if they are to bring their hand up for me, close enough for me to grab it with the hand that I have under their head, I'll actually try and get a Kimura or a Americana on that. Now, I did this to somebody. That somebody tried it in a competition later and was not able to close it out. And there was one thing that I did, and I picked up on it myself when I was doing it, and I didn't realize it at the time, but it was the thing that made that technique work. And what it was is this. He had me in half guard. I was on top. And what I did was I brought my leg up to where my foot was right behind his butt. Okay, and what that did was it popped his hips up off the ground and it scrunched him. It contained his torso basically between my leg that I had up and the arm that I had down in an Americana. And so I had him really scrunched up there, and so pulling the elbow down to where he was no longer in trouble, or extending it up to where he was no longer in trouble. These weren't options. I already had a hold of the wrist, so he couldn't pull it up any further, and I already had the arm under his arm, so he couldn't pull it down any further. And it was just one of those things. I had the arm on the wrong side of the head, but I had enough pressure on his upper body, and again, I had his hips up off the ground, that I was able to get that arm isolated in the right position and get the tap. But there was another thing that he did that was different too, was that one thing I was always taught with the Americana, and I think it makes the biggest difference, is you do like I don't know how to explain this, like when you're doing it the right way, you want to pinch your elbow into their neck, and you want to have that grip just on the other side of their wrist, and then you want to force the top of their wrist down to the ground. So you're actually bending their arm at their wrist with just their hand down, and then you rotate that elbow up, and that'll make them go tap, tap, tap-a-root. But yeah, so I did not stay for any sparring after that. I probably should have. But it's one of those things that I've noticed is cyclical with me. And at first, I don't tend, when I'm first coming back from something or whatever, I don't feel like guilty for not being in there. Like when I get to a certain point, literally I will be fighting myself. If I manage to make it out to the parking lot, I will literally be fighting with myself, not physically, but mentally, to go back in there and get at least around it. It's like, well, fuck, I'm right here. I can do it. And I'm not there yet. It's something that I work towards, and when I get it, I'll know. I mean, you'll hear me. I'll be like, fuck, I should have stayed there for at least a round. But like I said, I'm not quite there yet. It is a destination I shall get to eventually. Anyway, let's go ahead and throw down with some music. And I'm way down here at the bottom for some reason. But let's go all the way back up here at the top. Find us a good song by Body Count. Here we go. And I swear, there's some legislators out there I think definitely need to hear this song. And so here it is. Get a Job by Body Count. Here on Coin Metal, First Dance. And that was Body Count with Civil War. That was the computer selecting that one. I had nothing to do with that choice. But I was glad to let it run because it's a good song. Anywho, as far as what we're going to get into today, man, I've been spending way too much time on Twitter. just so much going on out there, and it's a readily available interface, where you can find out about stuff and comment about it too. And I spent quite a bit of time doing that today, so yeah. Anyway, as far as what I got up here, got this thing here, and for those of you who are in the know, you're aware that Coinbase went public today. That's kind of interesting. Not really, but it is interesting in that it was received very well as far as the initial offering, but there were several tiers to the initial offering, and if you were paying attention on Twitter, you saw that. But anyway, I guess it went off successfully. It shot up like a rocket, and then of course it came back down a little bit. But what does it mean as far as like crypto in general? I mean, we could say that it was kind of a official recognition of crypto as a significant factor in the global economy going forward. And so, that to me is about the long and short of it. I mean, it's not as really dramatic as some would like to paint it as being, because the fact of the matter is that I think that entities like Coinbase and whatnot, that they have a limited run, that they will exist for a limited period of time, that at some point or another, their position as third-party arbiter will either become too expensive, between regulation and all that other bullshit, or too technologically impossible for them to maintain. I could be mistaken. They've been around quite a while, and, Brian Armstrong is a pretty smart guy, so I don't know. We'll see. Anyway, got this thing here. It's on Coindesk.com. Coinbase stock meets crypto volatility. Coin tumbles below opening price near market close. And this is by Bradley Kuhn. So yes, penis. And it was authored April 14th, 2021 at 12:38 p.m. Coinbase shares fell Wednesday below their initial trading price as traders scrambled to assess the largest U.S. cryptocurrency exchange's value in a volatile first day following the historic direct listing on NASDAQ. Coin was changing hands around $334 as of 3:35 p.m. Eastern Time, below the initial price of $381 when trading began earlier in the day. Initially, the shares had rallied above 400 before retreating into the afternoon. The latest print was below the 348 where these shares last traded in private markets, but it remained above $250, reference price published late Tuesday by the NASDAQ. At a share price of $334, Coinbase would have a valuation of about $67 billion, assuming 199.2 million shares outstanding. Using the fully diluted share count of 261.3 million, the implied market capitalization would be about $87 billion. Earlier in the day, Coinbase had achieved a valuation of over $100 billion based on the higher share count. Quote, "There is bound to be a lot of volatility," Coinbase board member Fred Ursam told CNBC on Wednesday. Quote, "That's just the nature of such a large technology coming into existence." Yeah, this isn't the crypto market's first exposure to legacy markets, and it is not their first exposure to us, so I'm sure that counted a little bit against this, that maybe they would have had a much bigger initial boost if in fact we were a little earlier along. I don't know. Anyway, I noticed this one, and as you guys may or may not know, this show is more or less sponsored by Verge Currency's development team, and that's been pretty much in existence from the beginning. But it's something that I volunteer to do because I happen to believe in not only the coin, but that privacy is intrinsic to commerce. That in order for me to be secure in my property, it helps. It's not absolutely necessary, but it helps if nobody knows I have it. I mean, now, of course, if it's actually in your face and I happen to be in presence of it, yes, it's mine. Fuck you. Can't have it. But in terms of, being able to associate me with some volume of cash, which would be incredible, seeing as I don't have any, but that's beside the point. The point is that from outward view, like somebody looking at me and somebody saying, hey, that guy's got money, that's kind of a threat to me. And so the idea of Bitcoin as something that you only use through a third party, similar to your Visa card, it confers no advantage over existing payment systems. And it is certainly more cumbersome and less secure in some aspects than simply using Federal Reserve notes. And so, I think it's very, very important that we do everything possible to maintain the possession of our own coins and remain private in doing so. You should be John Q. Public or Jane Q. Public when you are out there walking around, as far as anybody else is concerned. Nobody should be able to sniff your phone and tell who you are, how much money you got, and all that other bullshit. No. Nobody should be able to do that to you. But there are some entities out there that want to do exactly that. Anyway, I got this thing here. It's on Coindesk.com. Privacy will become a more popular investing theme. Barry Selbert. So I guess he commented on that. Anyway, this is authored by Benjamin Powers. So yes, penis. And it was authored on April 12th, 2021 at 12:43 PDT PM. Or PM PDT. Anyway, continuing. In his first public interview in 8 months, Barry Selbert, co-founder and CEO of Digital Currency Group, Coindesk's parent company, placed an emphasis on privacy and privacy coins when discussing what protocols and areas he was following closely. In an appearance this morning on Coindesk TV's First Mover, Selbert said he believes privacy will be a draw for investors and mentioned 2 privacy coins he's particularly excited about and focused on, Zcash and Horizon. Never heard of Horizon, so anyway. Thematically, I think privacy is and is going to become a more popular investing theme, Selbert said. Zcash, currently the 51st largest cryptocurrency by market capitalization, was developed by Electric Coin Company, ECC. It recently announced a timeline for launching a variety of upgrades to the protocol that include privacy enhancements. The Horizon protocol, whose token Zen is the 101st largest cryptocurrency by market cap, is a sidechain platform that, quote, focuses on scalable data privacy and enables businesses and developers to custom build their own public or private blockchains using unique sidechain technology, Zendu, according to its website. Might have to check it out. Quote, privacy is at the core of what we're all building for our collective future. It's the most significant threat to those who wish to control others, and the most significant hope for a fair and open economy, said Josh Swihart, ECC's Vice President of Growth, in a message, quote, "It's at the center of everything regulators are wrestling with right now. From self-hosted wallets to DeFi, it is the key issue, the critical feature." How privacy coins have performed. Justin Barlow, research analyst at crypto data firm The Tie, told CoinDesk in a message that compared to other sectors, privacy coins have performed relatively well this year. Quote, "The average privacy coin is up about 550% year to date. For comparison, the average smart contract platform is up only about 350%, and the average currency is up around 175%, said Barlow. Privacy coins have underperformed DeFi, 875% year to date, and exchange tokens, 1,250% year to date. Barlow said there is an argument for privacy coins as people value the untraceable transactions they offer for both legitimate and illicit activity. And why would you want it for legitimate activity? Because fuck you. It ain't none of your fucking business. That's why. Continuing, quote, "Over time, as Bitcoin has become more mainstream, many in the community have realized that BTC transactions are easily traceable," he said. Quote, "Those that have been proponents of the anonymity or now pseudo-anonymity of the Bitcoin blockchain might gravitate towards privacy coins. Keep in mind that Chainalysis has found that only 0.9% of Zcash transactions are fully shielded, so it isn't entirely clear how much demand is out there yet. Privacy increasingly under scrutiny." Selbert's comments come amid both an exciting and troubling time for privacy and cryptocurrency. As Bitcoin is booming and the NFT craze continues, attention around cryptocurrencies is increasing generally, and privacy is a question that will again come to the forefront of a variety of debates. In the first report from the Crypto Council on Innovation, a newly formed trade group, which is probably all supported by very, very wealthy banks. Continuing, former acting director of the CIA, director of the CIA, okay, Michael Morrell wrote that, quote, "The broad generalizations about the use of Bitcoin in illicit finance are significantly overstated, and blockchain analysis is a highly effective crime-fighting and intelligence-gathering tool, a boon for surveillance." While the report was likely seen as a boon for Bitcoin, in a Twitter thread on the report, Sweetheart noted that, quote, "that Bitcoin crimes are overstated seems to be consistent with data. However, the argument that it's good that the U.S. can surveil everything is fatally flawed, and ironically, not even in the best interests of a surveillance state." It's true. It's true. It's absolutely true. Because you got to understand, there are people that want crime to happen. Okay, that are not themselves dubbed quote unquote criminals, but they are involved in criminal activity. It's a side gig. It's how they make money. They need money that nobody knows they have, and so they have to go about it through ways that nobody knows about, and of course that involves crime. But see, here's the problem. If you're ever too good at busting crime, suddenly the demand for paying you to continue busting criminals goes down, because suddenly there's a much less perceived need to have it going on. You know, you need to do crime occasionally in order to convince the public that you still need cops. Because if there's not enough crime, then you've got too many cops. See how that works? It's a balance. Continuing. Quote, if law enforcement can trace and exploit public financial data, so can China, North Korea, Russia, and even the very ransomware attackers who the report claims demand ransom in something that protects privacy. He tweeted, quote, this is a massive national security issue. Sweetheart said the report seemed like an attempt to shift risk from BTC to so-called anonymity-enhancing cryptocurrencies. A week ago, the quadrennial Globe Trends report from the National Intelligence Council also warned that privacy will be, quote, will effectively disappear. You know what? I found out that there are ways to be safe and secure online, but you need to be very, very careful, number one, and number two, you have to lie. Now, personally, I don't like lying, so it kind of comes difficultly. It kind of comes with some difficulty for me. But you know, when I'm very pointed and with purpose, properly incentivized, a little lie here or a little lie there doesn't hurt. Anyway, continuing on. Moving forward, how the cryptocurrency world and regulators interact around privacy and privacy coins will be an ongoing question that has no easy answer. Now, one thing that I really want to point out about this article, because it bears some mention. DCG does not like a lot of the projects that are out there because they compete with Bitcoin and other projects that they are heavily invested in. See, they like to use CoinDesk and other publications that they're involved in as platforms to notify you of what services are available from them or from companies that they happen to be involved in. Now, in this very article, they failed to mention at least 2 privacy coins that have higher market caps and are actually more profitable to mine. One of them being Verge. And I've talked about that a few times on this show, that Verge, typically when I look on coinwars.com, they keep track of things like the hash rate on various networks and so on and so forth. And that gives you an idea of how to plan where to dedicate your hash power and your system resources so you can make the most money, right? When I look on that chart, 9 times out of 10, Verge is within the top 5. Not the top 10, top 5. Occasionally it's down to the top 10, but for the most part it's up there in the top 5. Another one, Monero. Monero is higher on all the fucking coin charts out there. I think it's like, I want to say it's over a couple $100 now. Let me see if it'll show us. XRP, Bitcoin, Ethereum, Cardano, Chainlink, Litecoin, Dogecoin, Bitcoin Cash, Filecoin, Wrapped Bitcoin, Algorand, Bitcoin. Oh my god. Oh, there it is. Yeah, Monero, $324 per fucking coin. That's incredible. And it's looking like it's down. It's down like 3%. That's hilarious to me. That fucking article didn't mention anything about Monero. And yet look at where it is. I'm absolutely certain it's way more than Zcash. Yeah, Zcash here is $242 per coin. So yeah, Monero is worth more than Zcash, although that's pretty incredible too. $242 a coin? Shit. But yeah, there's no reason why they shouldn't have mentioned Monero or Verge. Let me see if they do mention Verge on this list. It doesn't look like they do. And I'm really surprised about that, because they got shit like Bancor. Who gives a fuck about Bancor? Anyway. So yeah, that's that's about what we got for that one. Get out of this page here. Get back to what I was... Yeah, this is on CoinMarketCap. I'm looking at the top privacy coins by market capitalization. And it doesn't even... Oh, here, Verge is 110? Wow. It must be because it's low per coin. But, I don't know. It's up, so... It's almost at 5 cents here now. Not bad at all. Not bad at all. Anyway, so let's get out of this business here. And, yeah, I want to get into this thing. I want to see if I can find that, let's see. I want to see if I can find that, that last article that we did. Let's see. Reopen the close tab. Yeah, here we go. I'm trying to find the report. Let's see here. Where the hell? Because it mentioned one in here, and I could have swore I clicked on it. Interview very Selbert, blah blah blah. Appearance, blah blah blah. Largest recently announced. Timeline for launching upgrades. That's for Zcash. Zen 101st. Huh. Where the hell did it say that? She analysis is found. No, that's not it. There we go. There we go. Oh, so that was it. Okay. So, ex-CIA director says criminals will move away from Bitcoin in new lobbying group's first report. You gotta be fucking kidding me. This is by Nicholas D. Guy looks like he's... No, he's not. Okay. Anyway, so, yes. Penis. This is authored on April 13th, 2021 at 3 a.m. PDT. Potential money launderers aren't really using Bitcoin, and of those who are, many are likely to move away from the cryptocurrency due to the fact that every transaction is recorded and visible to all. That's a feature, not a flaw. That's one conclusion of a report published by the Crypto Council for Innovation, a new lobbying group hoping to inform and influence regulatory actions around the cryptocurrency sector. The report, penned by former Central Intelligence Agency Acting Director Michael Morrell, is the first salvo in this effort. Quote, as more seizures and arrests are made, we believe illicit actors who are technology agnostic will continue to move away from using Bitcoin for money laundering purposes to other avenues that make it easier for them to hide their activities, the report said. Yeah, they're completely full of shit. They are going to move away from Bitcoin, but it won't have anything to do with privacy. It'll have to do with the fact that they have to pay hundreds of dollars for a fucking Bitcoin transaction. The council aims to, quote, move the needle in how governments approach crypto regulation, said Gus Coldabella, Chief Policy Officer at Paradigm, and one of the heads of the new organization, which was announced last week. Quote, we have a lot of policymakers who are becoming aware of crypto and, at the same time, might harbor some misconceptions about it, said Coldabella, who also served in the U.S. Department of Homeland Security and was previously at Circle, i.e. he's a Goldman Sachs employee. Morrell, who was hired to produce the report through his consulting firm Beacon Global Strategies, said he was interested in determining if the conventional wisdom that Bitcoin in particular is a major tool for money launderers was objectively accurate. In turn, he said he believes that the role Bitcoin might play in illicit activities should determine how much attention is given to it versus other national security issues like China developing its own sovereign digital currency. Quote, if we needed to be concerned about illicit finance and Bitcoin, by all means, let's focus on that. But if conventional wisdom is not that accurate, we should be going full steam ahead on competing, he said. The former longtime civil servant was joined by his colleagues Josh Kirshner and Thomas Schoenberger in producing the report. Morrell said, though, that the conclusions remain his own. He doesn't anticipate publishing anything else in the crypto industry specifically. Joining a crowd. When asked why create a new organization rather than join existing groups like the Blockchain Association or Chamber for Digital Commerce, Cotabella said the new council wants to focus more on international regulations rather than the U.S. government. International? Fuck you! Can't get fucking kids in America to listen to you. What makes you think that you're going to get the kids all over the planet to listen to you? Continuing. Fidelity Digital Assets, Coinbase, Square, and Paradigm are the organization's founding members. Quote, crypto is, as you know, inherently borderless, and it makes sense not just to address the policymakers in one country or one region, but across the world. And if we are to be successful, we should be doing these things. The educational piece and the iterating with policymakers piece in a global, coordinated way. In other words, somebody has a plan. Somebody already has their roadmap, and they wish to impose it on everybody else. Continuing. As more and more people get involved in the crypto sector, it will draw increasing attention from different regulatory entities, he said. No, it won't. We've been shitting since we've had assholes, but there's not that many more proctologists than there would otherwise be. He also noted that it's important that the industry engages with the governments of the world because these governments will enforce regulations regardless. Oh, so in other words, they're going to point a gun at you, so you might as well just listen to them anyway. We didn't fucking create this shit to comply with anybody. We created this shit so that we can do business with people. And whether or not that business happens to coincide or be within a fully regulatory green area, that's not really our concern. Sometimes those regulations are put in place simply and solely to disenfranchise and starve people. Is that something you really want to support? Maybe you like the people that they're trying to starve. Maybe they didn't actually do anything to harm anybody, except for happen to be born in a certain country or on a certain piece of land that has a certain resource under it or some shit like that. You know, we don't know the reasons. And there really shouldn't be any reasons. You step the fuck off. Anyway, continuing. He also noted that it is important that the industry engages with governments of the world. No, it isn't. Quote, if we don't engage with governments as an industry, then governments are still going to do what they're going to do without the benefit of hearing from people who are literate in crypto and have been thinking about these issues for years, he said. In other words, somebody has a plan. They want to impose that plan on you, and they can't currently because there aren't any frameworks to corral you into. And the thing that this asshole does not understand is, it does not matter what he says. It does not matter what legislators say. It doesn't matter what the guy with the gun says. If people want to engage in the mining or trading or transacting in cryptocurrencies, there isn't a fucking thing he or anybody else can say or do to stop them. That's the reality. We're a decade along in this shit that is entirely antithetical to the system that they really wish they could be imposing on us at this point, where the US dollar just like takes over everything, which was the plan. Or at least that was a facade of the plan. For all we know, we're in the facade of the plan too. That they figured that at one point or another it would just become so corrupt that the people would throw up their hands and say, fuck it, we're going to create our own currencies to transact in. Fuck all these people. You know, maybe that was a factor somewhere on somebody's equation where they were trying to predict outcomes of particular policy decisions. But I think at this point, we've been running like a decade now where we just do shit. And somebody will come along and say, that's illegal. We should make that illegal or some shit like that. And it'll get only so far. It'll get as far as it takes to run into somebody who actually knows what the fuck they're talking about concerning the subject. And then they will turn to them and they will say, no, that's a really stupid idea because remember 6 months ago when you were trying to get some money? Right. Well, I took what campaign funds that I had access to and I dedicated them to cryptocurrency. And because we bought, Bitcoin at such a price and we sold it at such a price, we have X amount of dollars and we still have some Bitcoin left over. When that person that wants to present that legislation hears that something from their secretary or their aide or something like that, all of a sudden it says, well, fuck. If I push this legislation, I'm going to get busted eventually. And I really like having this money that nobody knows I have and that nobody can stop me from having. So, I'm going to keep the money and I'm going to vote against this piece of shit legislation that really wasn't going to help anybody except for banks. And this is the same process that every single legislator and every single regulator and every single alphabet soup of federal departments, regulatory departments, it's the same conversation. And they run into the same resolution to that conversation. Do I want to give up money that nobody knows I have? Fuck no. So am I going to make an effort to make it easier to track that money and find out that I have it? Fuck no. It's kind of obvious. You got corporate interests on one side pressing them to make this an official industry that has official regulation. And then you have legislators on the other side whose kids are involved in mining, involved in deving, involved in trading. They're like, I don't want to bust my kids. Fuck you. My kids are making millions of fucking dollars. Your kids are doing jack shit. Fuck you. And I really think that that's like the totality of the conversation, that they come back to that every single time. They're like, dude, there isn't anything you can do to stop them. There isn't anything I can do to stop them. You asking me to stop them isn't going to achieve anything. So let's just try and make money off of it. We'll maybe try and tax it here and there or something like that. But let's just let this shit happen. And I believe that another aspect of that, if you were to dig deep enough into like Iran or China, in places where and also Russia and a few other places where they've caught people taking advantage of their cheap energy prices and mining with it, that if you were to dig deep enough, you would find out one of two things. Number one, legislators on the prosecuting side have some interest in mining, have some interest in trading, have some interest in a specific coin, and or B, the person that they're binding, or busting rather, that person was a competitor with them. Meaning that the legislator in question is a miner. And to him, he's just taking out competition. He wants the block rewards. The best way to do that is to send jackbooted thugs over to his house and take away all his miners. It's not going to stop anything. If anything, it'll just make it darker and harder to get a hold of. Anyway, let's go ahead and throw back down with some music. And where to go, though, with it? Here we go. This, to me, is like the perfect description of a legislator trying to touch crypto. And so here it is. 9 Inch Nails, Mr. Self-Destruct, here on Coin Metal. And that was Wayne Static with SOM. I have no idea what it stood for, but I'm sure Wayne knew. That's what was important, right? Anyway, I have this one here, and I really should have gone into it the other day, but it didn't exist. So we're just going to go with it now. And this is on Cointelegraph.com, and it's by Samuel Hague. So yes, penis. This is written approximately an hour ago. You can already invest in hundreds of ETFs with exposure to Bitcoin. Numerous U.S. traded exchange-traded funds, or ETFs, are loading up on shares in the world's top crypto firms. According to ETF.com, hundreds of funds have invested in publicly listed companies that are holding Bitcoin on their balance sheets. As of this writing, 88 ETFs hold MicroStrategy shares, while 144 ETFs hold Square, and 222 ETFs hold Tesla. 16 ETFs have direct exposure to Bitcoin mining stocks. Almost 200 ETFs hold shares in BlackRock, which recently profited $360,457 after starting to, quote, dabble a bit in crypto. Top performing ETFs with crypto exposure. 9 funds are exposed to both crypto mining stocks and firms with Bitcoin on their balance sheets. As a share of its overall portfolio, the Amplified Transformational Data Sharing ETF, Block, has the greatest exposure to crypto. 7 of Block's top 10 allocations are in leading crypto firms, including Galaxy Digital, Marathon Digital, Voyager Digital, Hut 8 Mining, Hive Blockchain, Riot Blockchain, and Argo Blockchain. These stocks represent 1/3 of Block's capital. A lot of it's going to be wasted money, I gotta tell you. The fund describes its investments as targeting, quote, transformational data sharing technologies. Block is among the top performing ETFs of 2021 so far, gaining 71.7% since the start of the year. So far in 2021, it's recorded the 8th highest returns among all ETFs and ranks second if you exclude leveraged and inverse products. Among ETFs, Block is the single largest holder of both MicroStrategy and Marathon stock. The NASDAQ Next Gen Economy ETF, BLCN, is the only other crypto-exposed ETF that ranks among the top 100 ETFs by YTD performance, year-to-date performance, when excluding inverse and leveraged funds, coming in at 82nd with a year-to-date gain of 23.15%, or 15% rather. BLCN currently holds $5.63 million worth of Marathon stock, $5.4 million in MicroStrategy, and $5.24 million in Square. I wonder how many of those are entities of other entities. Like Square, I think they've got their, I think that's the one I was confused on. I'm not 100% on this, but I think JP Morgan and Chase are the regulatory proxies for Square. Anyway, continuing on. Largest holders by total value of assets. When measured by total value of assets, the Vanguard Total Stock Market ETF, VTI, is the ETF with the heaviest allocations to crypto-exposed firms. The VTI currently represents about $2.77 billion worth of Tesla, $478 million of Square, and $29.4 million of MicroStrategy, and $11.38 million of Riot Blockchain. VTI also owns $516 million worth of Blackwater. The iShares Core S&P Total U.S. Stock Market ETF, ITOT, is the second largest fund by overall exposure to crypto, holding $450 million worth of Tesla, $4.4 million of MicroStrategy, $3.86 million of Marathon, and $312 million or $300.12 million in Riot. The U.S. Securities and Exchange Commission is yet to issue a verdict on 7 applications for Bitcoin ETFs, including Fidelity Investments, Skybridge Capital, Wisdom Tree, Morgan Stanley, and NYDIG, VanEck, and Valkyrie Digital Assets. The Purpose Bitcoin ETF began trading on the Toronto Stock Exchange in mid-February and has accumulated roughly $1 billion worth of Bitcoin since inception. Canada's 9 Point Partners and CI have also announced plans to convert their Bitcoin funds into ETFs. Very interesting. But when you look at that, it really doesn't have as much, I don't know how to explain it. It doesn't have as much traction as you would think. I mean, all it is in terms of investments is vehicles that institutions will be getting into. Not necessarily something that benefits you. And where that can be an issue is that funds that are exogenously developed like that and aren't actually dependent upon any kind of work performed or coins mined, when it exceeds a certain threshold, it'll exceed to a point where it will support movements that aren't necessarily in the public's interest. And I think this is where we're going to see some of that deflection of interest away from Bitcoin, where they will get the majority of the users using it off-chain. I can concede that one. But then, those people that are using it off-chain via those third-party regulated entities will experience whatever additional cruft or friction that these entities have wished to impose upon people transacting on abstractive layers like that. So taxation on all your commerce. You go and you buy a cup of coffee. Maybe there'll be your state tax, your national tax, an international tax, some kind of excise tax or whatever associated with your purchase, and you won't really have a choice in it because it'll just be there. It'll be imposed on the price. And the payment processor will be more than happy to pay it for you. And I think that's the dangerous thing, is that they will, of course, abuse this position. And of course, we will see hacks on second layer stuff. And I've said this before, that up until there is enough money tied up in these payment channels to bother with trying to hack them, it's one of those hacks that somebody's sitting on right now, where they've got an exploit and they can light up a goddamn botnet overnight and hammer down on a transaction, get it double spent, and all the Bitcoin sent to their wallet. And then they're off to the races, and when you wake up, all of your fucking funds are gone because the payment services provider that was providing you Bitcoin services, allowing you to transact on their payment channel, got hacked, and all of the Bitcoin that was tied up in the payment channel got paid out to somebody's wallet, not the intended recipients. And everybody who was doing business and buying stuff and selling stuff, everybody that was involved in commerce during that block period or on that payment channel is now asked out. It didn't happen. The money went to somebody else. It didn't settle. These transactions do not settle until they settle to the Bitcoin blockchain. That is the difference between them and on-chain transactions. Anyway, I did see this one here, and I think it's worth mentioning because we keep getting a bunch of bullshit talked about how much electricity is being dedicated to Bitcoin mining. And now when you contrast, and just keep in mind now, the price of Bitcoin in 2015, when you listen to this information, and hopefully they'll actually declare it. Anyway, this is by Martin Young. It is on Cointelegraph.com. And yes, penis. Bitcoin power consumption 66 times higher than in 2015. Citigroup. And this is authored approximately an hour ago. The Bitcoin energy consumption debate is heating up faster than the planet, with corporations facing pushback from the public and shareholders over Bitcoin investments. According to a Citigroup Inc. report, Bitcoin is consuming 66 times more electricity than it did back in 2015. It added that the carbon emissions associated with mining will likely face increasing scrutiny, according to Bloomberg, and that's a bunch of bullshit. Anyway, continuing, this assertion is backed up by new research from MasterCard, who doesn't have a perverse interest here, which just released its own carbon calculator that shows 54% of people believe that preserving the environment is more important now than it was pre-COVID. Bullshit, they're being manipulated. Citigroup analysts also stated that, quote, as the value of Bitcoin rises, so should its energy consumption. Yeah, no shit. However, the network's electricity usage is rising much more slowly than the price, which has risen by approximately 170 times over the same period. The Citigroup report, citing numbers from the Cambridge University Center for Alternative Finance, stated that the global power demand by the Bitcoin network reached an annualized 143 terawatt hours. This is about 4% higher than Argentina's total electricity generation in 2019. Notice that they had to go back to 2019 to quote that. They couldn't say 2021. Continuing. The Cambridge Bitcoin Electricity Consumption Index, CBECI, currently estimates Bitcoin's annual electricity consumption is currently somewhere between that of Sweden and Malaysia at 141.6 terawatts per year. The report suggests that China may crack down on mining due to environmental concerns. Are you fucking kidding me? These are among the people that developed the idea of constant and perpetual mask wearing. Only in China they do it because the sky is fucking gray with pollutants. Give me a fucking break. Quote, mining and the use of these coins is undoubtedly energy intensive and could face greater regulatory scrutiny as adoption expands, especially if the U.S. continues to scale its crypto footprint and market leader China cracks down on Bitcoin mining if it adversely impacts the climate goals. It's bullshit. Bitcoin's environmental impact has been fiercely debated, with many arguments about it either refuted or at least shown to be much more complicated than opponents suggest. In late March, Coinmetrics co-founder Nick Carter published a well-researched rebuttal to some of the key claims. In it, he stated that there is an abundance of energy in the 4 Chinese provinces that the majority of Bitcoin mining occurs, and much of it is derived from solar, wind, and hydropower. Additionally, the Chinese government actually curtails or sequesters power by removing excess energy from the grid or public consumption, often to maintain price levels. To maintain profits, miners will generally use the cheapest power available. There is an annual migration to Sichuan province to take advantage of cheap hydroelectric power during the rainy season. Studies suggest that between 39% and 76% of Bitcoin mining uses renewable energy. So yeah, suck it. Swear, one of these days, I'm going to write a fucking book. I've got this whole thesis in my dome about how all this shit really works. And the messages that you're being sent about Bitcoin is wasteful, it's a bunch of bullshit. Bitcoin is not wasteful when you consider the alternatives that already exist for moving money around. If you look at Bitcoin as solely that, all it does is it moves money from A to B. It doesn't identify these people. All they are is a bunch of fucking numbers to Bitcoin. And it sends the money from A to B, right? And I've told you guys before to, when you're on Twitter, follow whale alerts. This Twitter account follows all the big transactions that are happening on all of the networks out there, or at least a lot of them. I don't know exactly how many, but I do know this. They put up some weird fucking coins up there and tell you about the transactions that are going on. And I mean, they're in the millions of dollars, and I see them every fucking day. I saw one the other day. It was like $300 and something million worth of Bitcoin being exchanged from one unknown wallet to another. Now, you can assume that might be a bank to an exchange, that might be an exchange to an exchange. You can assume that. But you do not know. It's an unidentified wallet to an unidentified wallet. For all you know, for all anyone knows, somebody bought a small island in the Philippines and used Bitcoin to pay the transaction, to send the money. And why? Because if they were to have wired $300 million in dollars, it would have cost them millions of dollars in fees. And not only that, they probably would have had to pay taxes on it. So, there's a wide variety of incentives to use Bitcoin or other cryptocurrencies. But this whole argument that they're inefficient, that they're wasteful, it's a fucking bunch of bullshit. I mean, I want you to take a look. Go to Best Buy, and I want you to look at the TVs that are available. If you have been using a computer for longer than 10 years, and you look at the prices for computer displays and just huge TVs, you could buy a 4K TV right now for like $200, $300 that's over 40 inches. The first monitor that I bought for a computer, it was a 21-inch CRT. I paid $1,000 for it. And that was really cheap, actually. I got a really good deal on it. But it was a 21-inch CRT. It was a fucking huge monitor. Monstrous thing. I loved it dearly. I carried it everywhere, even though it was very, very heavy. Fortunately, I'm a strong guy. So, this big-ass monitor. But like I said, it cost me $1,000. And it was really low resolution by comparison to today's standards. So when you look at that differential, I mean, like, up until about, I want to say, I used that big-ass monitor until, I want to say, about 2000, and then I changed over to the PC era, because my Macintosh finally broke down on me. And actually, I don't think it broke down on me. I think what happened was I had additional money, and rather than spending that additional money on making a PC, I decided to try and continue to upgrade my Power PC. And it was a Macintosh clone. But anyway, it stopped working. But the monitor thing that I was going to here, what these people completely ignore is if you were to go back to, say, 2012, and you were to look at the hardware market, the biggest purchasers of video cards suddenly became not gamers, which was the quote-unquote intended market, but rather miners. Because they found out that they could mine Bitcoin better on GPUs than they could on CPUs. And voila, everybody who had ever gamed and like fell out of vogue with it or whatever, had a gaming box they weren't doing anything with, suddenly they could make it into a minor and be off to the races and be actually making money. And so, I mean, it was ideal for students because, you know, they'd have gaming boxes, they'd have virtually free electricity, and so there it was. They could set it up any way they wanted to because it was their living residence, and that's what they did with it. But this created an effect, though, where these guys that were mining with these cards, they're making so much money that they're like, I want to reinvest this money in more mining gear. And of course, we hit a point where it was no longer profitable for them to mine because it became too difficult. And then ASICs came along and blew the doors off of GPU and CPU mining, so on and so forth. Long story. Anyway, the point being is it caused everything that is electronic to get smaller, cheaper, faster, more powerful, and more efficient. And it did this based on the most base of all drivers in retail, and that is demand. All of a sudden, people are buying these high-end cards, and they're not buying one of them, they're buying 10 of them. So all of a sudden, NVIDIA's like, well, fuck, I got a warehouse that is now empty, and I got to refill it with GPUs. And not only that, I got to do it with my high-end cards. You know, my average unit is about $150 right now, but people want these $500 units, so we're going to go ahead and produce those. All of a sudden, you have to start thinking about things, well, how am I going to scale in order to make sure that the majority of this demand is facilitated by, or like taken care of, supplied with my GPUs? I have to make them faster, I have to make them cheaper, I have to make them more efficient, I have to make them smaller, I have to make them cooler. Because those are the metrics that the people that are buying these cards are weighing them by. It's got to use less electricity, it's got to be cooler, it's got to be something quieter, it's got to be faster, it's got to be more powerful than the next guy's, because if it isn't, the next guy's going to eat my lunch. The next guy's going to get the purchase, not me. So I got to make more cards. I got to make better cards than him. Because if I don't make better cards, I don't make cheaper cards, I don't make more efficient cards, the purchase is going to go to him. It's plain capitalism has now incentivized, has monetized efficiency. And these people have the audacity to complain about it. And they're bitching about it on devices that wouldn't even be possible without it. You know, they'd still be looking at CRT fucking monitors going blind on them. But they're not. You know, because the money was there to go into R&D, and the motivation was there to do it better, faster, cheaper than the guy next door. And this is continuing too. This isn't stopped yet. If anything, it's probably gotten even worse. Ethereum, I read it the other day, Ethereum's network has grown by like 100% over the last 6 months. Here they are talking to everybody, telling, oh, we're going to go to proof of stake. And their proof of work network just expanded by 100%. Give me a fucking break. Anyway, let's go ahead and throw back down with some music. And as far as where we're going to go, here we go. Strapping young lad. Oh my fucking god. Here on Coin Metal. And that was Static X with Push It. And it is with that I'd like to close out this episode. Thank you very much for listening. I certainly do appreciate the support. We will be back again on Friday at 8 p.m. Pacific Standard Time. And so until then, I want y'all to trade safe. do your homework. And watch out for your own bunghole, because nobody else is going to do it for you. And as far as our last dance is concerned, it looks like the program is cheesing out on me here. So I'm going to go ahead and get reconnected really quick here. And got that all resolved. And so, as far as our last dance is concerned, I have not picked anything out. You know how that goes. But I did have one kind of picked out. And I think I want to go with it because it seemed like a good way. And so, let me get back to it here. Power Man, Power Man, Power Man. Power Man. And as far as the last dance, where the hell did No. Damn it. I ended up losing the song. Where the hell did it go? Ah, here we go. Supernova goes pop. Last dance. Here on Coin Metal. Thank you again for listening, and you'll have an excellent evening. Good night.